What's up, everybody, and good afternoon or good morning, wherever you might be located. I'm currently in Detroit. Today's market vibe is risk on wearing a reflector vest. We're crossing the street, yes, but we've also looked both ways and texted mom when we got there. Semis are hot again. China consumer is doing cardio. Small caps are arguing with their therapist, and the dark pools are quietly stuffing index ETFs like it's a Costco run. Let's do the adult thing, follow the money, and then mock it a little. So the room temperature, let's talk about our flow scanner so far. NVIDIA is leading the day with 24 million in overall flow, with 18 million coming into calls. And the translation here, the market still believes in the GPU church. It's just teething with a seatbelt. And also, they have earnings this week, so we might see some aggressive bets going into that as well. PDD is in second place, not far behind, with 21.2 million in flow, with 16 million going into calls. That's selective risk. They'll chase where there's growth and maybe a coupon. And then QQQ sits around 12.4 million right now, with 9.7 million in calls and 2.6 million in puts. Tech wants a dance, but it keeps one hand on the rail just for safety. IWM, we're seeing 11.7 million with more puts than calls currently. That's Wall Street saying we like America's future, just not necessarily this Monday morning. FXI, we're seeing 6.3 million, all calls going into that. Tesla is another one, 4.94 million, mainly going all into calls as well. The cult is definitely gathering together. We have BAC with 4.6 million coming into puts mainly. I think, 3.3 million is going into puts there as well. Banks are the friend who says, I'm fine, then sends a 2 a.m. paragraph. So why does this matter? Well, that distribution says risk taking with training wheels. Heat in NVIDIA, PDD, and QQQ, and FXI, while caution, think IWM, BAC, IREN, AMD, and MicroStrategy as well. Now, we're also seeing some indices in macro tone. It's flirting, but it's going to sign the prenup first. From your big money sheet, we have QQQ calls coming in, 570s due for 919, 7.1 million. Someone wants upside exposure into fall without marrying it. And then IWM, we're seeing 223 puts for 919, 6.6 million. Small cap downside insurance because earnings revision is not a Hallmark movie. And then FXI, we saw a $40 call for 6.3 million. China optimism with time attached on that as well. And then we also saw some IWM upside with 240 calls coming in. So it's insurance and optionality. Talk about some serious adulting. On the dark pool front, we're seeing VU prints 353 million before 9 a.m. and HYG and others. So big allocators are doing broad ETF plumbing, stock/credit core exposure, not panic. When the quiet money is busy, it sets a floor for the loud money. So the take here is the tape is risk on, professionally managed. Calls where growth is credible, puts where beta can roll and ankle. If we turn red, IWM put shelves become price magnets. If green, QQQ call lanes grease the ramp. And then in the semis and AI area, the protagonist is wearing a harness currently. NVIDIA is everywhere on your sheets with earnings coming up this week. $200 calls, $175 calls, but there's also downside protection in the complex elsewhere. Earlier sessions had $150 put blocks, but today's tone leans upside in NVIDIA. AMD, we're seeing 140 puts due for 12/18/2026. It's a long-dated seatbelt. That's not bearish. That's a valuation cycle respect move. And then TSM and semis, your unusual tape shows hedges. I think Oxy is there too, different sector, and some NVIDIA 270 calls due for 12/19. And that is the what if it just keeps going type of chip. Now, why does this matter? The market still treats AI infrastructure as the main character, but a grown-up one. Upside is rented with duration and downside is insured where multiple compression lives. If we rip, NVIDIA leads. If we slip, AMD and TSM puts will do their jobs as well. And then we're seeing some China consumer and EM rotation. We believe, but with a return policy is the theme here. PDD is our theme because they did have earnings earlier this morning. We had 145 calls due for November 21st of 2025, 3.75 million there. 140 calls due for October 17th of 2025. But there is some downside protection with puts coming in at 130 for January 16th of 2026. And then we also saw 130 puts for 1017 as well. This is a two-sided positioning situation. Traders want upside momentum into catalysts, and funds hedge the macro fog. That's how you stay invited to the year-end party. FXI, all calls on the flow scanner. EWZ was all calls in both flow and big money. Now, EM beta is getting programmatic bids when the dollar/yields exhale. If DXY or rates spike, this is the first to feel it. Then we're also seeing banks at credit and don't ruin my quarter. We saw Bank of America, BAC, pop twice, $45 puts for 2027. That's a macro/credit cushion with a shit ton of time on it. And then we have $50 calls because carry still exists and buybacks aren't illegal yet. So that is one thing to be aware of as well. We also saw GS get a spicy line of a $780 put going into January 16th of 2026. That's not I hate Goldman. That's I hate surprise VAR. Now, with HYG printing in dark pools and VCIT and SPHQ rebalance, the grown-ups are tuning the risk engine. Own equities, hedge credit, and for banks, keep a tail risk umbrella handy. And then we had some odd couple corners, all right? And Run was one of those. $14 puts due for October 17th of 2025. 309K into these. Renewable hedged, policy and rate sensitivity. Go ahead and pick your poison and sit on it, folks. And then we had Oxy. $40 puts due for November 21st of 2025. 924K dumped into these. Energy downside insurance. That's what we're thinking here. If crude sneezes, this will catch the tissue. And then open a trio of small but aggressive call sweeps for the $10 calls. Spec beta for the afternoon crowd. And then TIGR and RKT calls, retail sensitive tickers getting nibbles. If the tape trends green, these will definitely follow through. This is a texture of risk on day. Rotation into rate sensitive beta via options while hedging the stuff that blows up when Powell clears his throat or wipes his nose. Now, why is this or actually healthcare is our last section. Earlier this morning, we've seen healthcare as a steady, long-dated theme across the days. Today, your screen flags seatbelt behavior in places like BAC puts, and on prior days, MDT calls. IREN miners put dominates here with 3.5 million in puts versus 0.46 million in calls. If Bitcoin's beta wobbles, somebody already strapped the harness. These are edge guards on the portfolio, non-AI exposures that soften the factor swings. Now, why is this flow happening? Well, calendar risk. We're in a macro headline season, and the market has learned to rent upside and insure downside, like a responsible adult who still orders dessert. Dealer dynamics. We're seeing heavy put shelves in IWM SPY when they build, can pull price on red. Crowded call lanes like QQQ, NVDA, and PDD can glide us on green. You don't need to predict, know the busy strikes. And then allocator plumbing. Those VU, HYG, VCIT, VTI, dark pool blocks, that's the quiet hand adding ballast so they can loud hand. So the loud hand can day trade without falling off the boat. Now, if we stay green, expect QQQ call lanes and NVIDIA and PDD momentum to ease the tape higher. Not a melt up, a glide path. EWZ FXI call tone tends to hold when the dollar relaxes. Open and RKT are type beta that you can follow. If we wobble red, watch IWM put region and SPY downside shelves as magnets. AMD and TSM downside hedges bite first across semis, and BAC and GS protection starts to look precedent. HYG activity suggests and says spreads could remind you they exist. So today's midday verdict: risk on with a reflective vest. NVIDIA is still the prom king, but he's wearing sensible shoes. PDD, FXI, and EWZ tell you global risk isn't dead, it's just supervised. And IWM hedges say we believe in America eventually, but we also own a calendar. And then banks and credit are insured, miners are buckled in dark pools, stuffed the ETFs, so we can argue about semicolons on FinTwit. Trade the theme, skip the noise, and please don't play or pay peak IV at brunch. I'll see you guys at the close. Hope you have a great day. Make sure you like, subscribe, and all that other good shit so you never miss a trades and gains market recap. See you guys in the next one.